some familiar and new faces. Just give me a moment as my panelists join me. Great. Hi, folks. Oh, and I think we're just missing Hillman. All right. So revenue in an economic downturn. If you want to see what else we've got going on for the rest of the day, feel free to hit the agenda tab at the top of your event and see our full schedule of events. So here's the agenda for today's panel. First, I'm going to go over some housekeeping because I would be amiss if I didn't start MSP events with some housekeeping and some rules. Then I'm going to hand it over to our moderator to do speaker introductions. Then we will head into content and then have some time for Q&A and close with some key takeaways. But before we dive in, let's hop into housekeeping. So the first thing, this event is being recorded. You'll be able to access the recording of the event. Second, please familiarize yourself with Goldcast. As you can see, there's a lot of avenues that you can engage with us. There's chat, there's Q&A. Feel free to put in your questions, thoughts for the panelists, as well as just check in with each other. Please interact and engage with each other during the summit and this event. And lastly, go ahead and check out all the amazing speakers that we have for this whole week. If you go to the speakers tab at the top of the screen, and again, give our sponsors some love and shout them out in the sponsor booth. So I'm about to pull an awesome disappearing act where now you see me and then you will not. I'm going to hand it over to our fantastic moderator, Hillman Sori, who is going to get us started. So with that, Hillman, take it away.
And poof, there she goes. Thank you, Janisha from New York. Really appreciate the intro. Strike while the iron is cool, the VC point of view on boosting revenue in an economic downturn. I'm Hillman Sori. Let's do a quick round of introductions here. I'm a partner in 212 Angels, which is an emerging seed stage fund with 33 companies in the portfolio. I'm also a co-founder of Coach CRM, which is a seed stage B2B SaaS tool. I'm also a co-founder of a bootstrap company called Closed Loop, where we do sales enablement consulting. I've written a few books on sales and sales management. And I'm in Europe right now, where the dollar is a half penny away from parity to the euro for the first time in 20 years, if you're just waking up. So a lot of news in this economy. Let's hear from our panelists today. Tell us about yourself.
Hello, everyone. So great to be here. Thanks for tuning in. Really excited to be part of this panel as well. My name is Jay Poe. I'm a co-founder and managing partner at Stage 2 Capital. We are an early stage, largely B2B SaaS investor, largely seed and Series A. Our particular focus is around go-to-market. So we're the first fund backed by over 300 limited partners who are from the revenue world, CMOs, heads of sales, CS, RevOps, partnerships, etc. And prior to stage 2, I was at Bessemer.
Thanks, Jay. Doug,
Yo, what's up, Hillman?
what's up, man?
What's up, everybody? Great to see y'all. Jay, I feel like you're the only true core VC that came up kind of like the VC route. The rest of us we're all a bunch of I don't know, we're maybe like phony VCs. I don't like I'm like, I'm an operator, right? I guess the way I think of myself is I'm a sales professional wrapped in a marketer's body that cares more about customer success than most revenue leaders do, because that's where you're going to get all of your upside. And I joined the dark side here at Emergence Capital as a growth partner about 5.5 years ago. Basically, I view myself as free go-to-market consulting for our early portfolio companies, because so many of them are so driven by product and engineering, and they don't know shit about go-to-market, as we all can attest to, since we're all go-to-market revenue executives. So great to be here.
Thanks, Doug. Mecca.
Yeah, some tough acts to follow, but hi, everyone. My name is Mecca Sonye. I'm a partner here at First Round Capital. I joined the dark side just 1.5 years ago. So 6 quarters ago, I owned a revenue number. So I know what all of you are thinking about right now. But First Round, we are one of the largest generalist seed-focused VCs, one of the early backers in Uber, Square, Roblox, and Looker. I tend to spend a lot of my time in B2B SaaS and tend to be the go-to-market focused partner here at First Round. Led sales organizations at Stripe and Mixpanel, and was a go-to-market consultant at Bain & Company before showing up here. So really honored to be here at the panel, and thanks everyone for joining us.
Mecca, glad you're here. I want to start with you. The title of this thing is boosting, right? Boosting revenue. So what are we talking about? Are we talking about holding on for dear life and just getting that little boost? Are we talking about continuing a trend towards fast growth, which is why we're all invested in these companies to begin with? You come from a background of Bain and some financial modeling. What is your 1.5 years in telling us that we should be doing?
Yeah, I mean, what I love to tell to my founders is the only market that matters is the market for your own equity. Despite all the craziness that's going on, there's so many companies that are actually accelerating growth in the pandemic. And so I've seen a ton of sales leaders who look at the macro context and use it as an excuse. And I've seen others who say, hey, we're a core part of what every business needs to do. This is a time where we can continue to grow. And so I think for anyone who's in early stage startups, even throughout recessions, you still want to be trying to manage those, 2x, 3x year over year growth rates, depending on sort of what size and scale you're in. And, when the market is tough, if you're only at 10 million or 50 million in ARR, there's still so much headroom in the market that you shouldn't be looking at these macro excuses as reasons for sort of not continuing to grow at the clip that you expected to coming into the beginning of the year.
It's one of those things of don't believe the hype and control what you can control, right? Doug, you've talked about before, folks are kind of talking about the prediction of the horizon of the recession. And I've heard you say recently, the horizon is upon us. You say more about that.
We're in it. I mean, I'm sorry, we keep even talking about when we get to this recession. I'm sorry, we're in it. Inflation's higher than it's ever been before. The cost of money and raising capital is way more difficult right now. So we're in the middle of it. But, I guess to kind of build off that last comment, one of the things to be mindful of is there are definitely recession-proof industries in the market, right? Insurance, healthcare, security. So as Mecca mentioned, there's a ton of upside that can still happen in a down economy. So if you're looking for a job, why don't you go look for, industries that feel more recession-proof? If you're in sales or leading a sales team, look for the low-hanging fruit, meaning if you have customers in some of those more recession-proof industries, double down on those. Find out, how did you identify them? Who did you engage with? What was the sales cycle? Continue to dig into areas where there's still a lot of fruit to be had. Interestingly enough, one of our best investment years of all time was actually back in 2008. And the companies that we invested in 2008 have turned out to be the best performers that we've had in our whole portfolio. And again, we just do early stage B2B enterprise SaaS. But there's a ton of opportunity to be had in a market that is not feeling very frothy.
Well, look at it like this, right? There was Google in 1998, just before the bubble burst, and Salesforce in 99, just before the bubble burst. 2004 Facebook, just before the Great Recession. If you want to go way, way back in the Wayback Machine, you had Microsoft in 75, just after something that looked a whole lot like this economy. I mean, there's opportunity here, but you know what's interesting? Sitting here listening to the four of us, that's not what I hear from founders and sales execs that I'm talking to. I'm hearing we're being told to lay off, we're being told to tighten the belt, we're being told to batten the hatches and wait for all hell to break loose. Jay, you've got a more optimistic output. It could be outlook. It could be because you've got an arsenal of revenue leaders over there at your fund. But what are you hearing?
Yeah, I certainly am just a bleeding optimist. Q2 numbers have kind of are trickling in now. We're starting to see just the real data. We try to like let the market speak. And I think the conclusion is most companies, if not all companies, have the potential to step on the gas, assuming a mindset shift. I think that's the biggest thing that has to happen here. I think everyone saw what happened in 2021 with the way that fundraising markets have been, the way that news was reported around what was talked about. And I think now we're starting to see, cost of capital going up. Doug was mentioning interest rates. It's expensive to grow, but people still need software. Software still solves a lot of problems. It helps a lot of businesses across various industries. We at Stage 2 have a lot, and folks on this call, Doug, Mecca, portfolio companies stretch across various industries. We're seeing software, as long as it's a must-have, it solves a really, really important problem, which we all are supporting entrepreneurs to go identify and solve and see that come to fruition. If you solve real problems, you're going to be around for the long haul. Software is a very, in a way, recession-proof industry because we're really like solving huge problems that cost money if it's not solved, or can lead to new revenue streams depending on what you do. And I think the world of venture as well, given that it's a private market, there are a lot of funds that still have capital. So while there's a little bit of a pause, there's a little bit of a reset, as long as mindsets are shifted towards efficiency. We'll go through this a lot. The mindset shift needs to happen now, but assuming it does, there's a big market out there, and we're all looking for opportunities to continue to help support these entrepreneurs.
So a mindset shift requires a little Freudian slip there. A mindset shift requires a level of behavior modification, right? You can't just kind of wake up in the morning and be like, oh yeah, okay, I get it. Jay said I got to shift my mindset and see if I'm solving problems. Done. Doug, you're the only person I know who's actually had a chief storyteller title, where you were out there talking to people about how to get messages that resonate with a customer. I know you beat the drum of listening to the customer. How do you talk about this to an executive or to a founder in a very practical way, where it's not just this theoretical level of like, change your mind, do things differently? And I'm not belittling what you said, Joe. I'm just trying to echo this and pull it together from a tactical perspective. How do you get your team around that when you had kind of a feast, a feast of access to funds, and now you're in a situation where it's like, okay, we got to make some decisions here and really figure out if we're solving problems for people and what those problems are?
It's an interesting question. Three things come to mind immediately. Number one, I think the reality is yes, there's still products to be sold and buyers to be found out there. But at the end of the day, we've got to be realistic and recognize the fact that, look, valuations got out of hand. Ideas were born on almost like, kind of reminds me back to the early 2000s, where these ideas were born on a napkin and getting insane valuations without a focus on profitability and without a real focus on, is this a real market and something that we can continue to build, to invest in and build upon. And I think that's part of the reason why there's been a correction, why there's so many layoffs happening. Look, we've told all of our portfolio companies, focus on your burn rate. Make sure you've got 24 months of capital in the bank. And you know what? You might have to trim some of the fat. If that means you're burnt, it means you got to pull your burn down. That's just the reality of the business. That's the state of the business that we're in right now. That's not a doom and gloom message. Let's just like be honest and get back to the business of actually creating a company that's going to be sustainably profitable for the long term. Like, who doesn't want to be a part of that, right? So part of it, I think part of it's your messaging to the team and recognizing like, hey, this is what we're focused on right now, and this is what we're going to be focused on in terms of delivering value to our customers for the long haul. that's a big part of Jay's message is like, hey, let's shift our thinking and think about what's possible, but do it in a way that's efficient. Now, when you're reaching out, engaging the customers, one of the things every company right now is doing is reorienting their messaging, because they're all focused on efficiency and cost savings and, like, hey, do more with less. And I think one of the things, I think it's important to do, but B, be careful, because everyone's doing it. And so you got to be careful of not sounding like a Me Too message. Like, we can do the same thing. If you're not realistic about the value that you provide to your customers, go talk to your customers, find out in their language why you're so valuable. Talk to them and ask them, what would happen if we just shut off our service? If you had no longer had access to our applications, what would happen to you? What other options might you choose? Because that's going to give you real insight into how you can reorient your messaging. And by the way, there's some great stories to be told from those conversations. I don't think we spend enough time talking to our customers and really getting their context and their point of view. When it's frothy, we're just like, oh, we're just going to keep going. And then when things get difficult, it's like, all right, well, maybe we should slow down a little bit and double click on the things that really matter.
Who owns that conversation, Doug, in an organization?
Everyone. I mean, honestly, the CEO should care about it, and the CEO should be bringing up conversations that they've had, that the head of marketing, the head of customer success, a CSM, an AE, everyone. This should be top of mind for absolutely everybody. Is, first of all, you got to take care of your customers. No one can afford to lose a customer right now.
Yeah.
Right. Just because we know sales cycles are taking longer, discount rates are going up. Just the buying process is slowing down a little bit because people are being a little bit more conservative. So let's make sure that we're really taking care of our customers. And in doing so, we can gather a ton of great detail and insight from them.
Yeah. Mecca, Jay has talked about mindset. Doug has talked about the conversation with the customers, and also kind of illuminated the fact that, the reality is there needs to be some tightening. There needs to be some trimming of the fat. We also kind of level set at the beginning by saying there's opportunity here, right? That we've seen it before. There are folks in our portfolios who've had success. If you study history, you've seen that lots of companies have been born in these types of economic times. So where do you put your resources at this time? What are the conversations you should be having internally to figure out where the opportunity is?
Yeah. And so I think the first thing to figure out is what kind of company you're sitting in, what's your base case scenario. And so I had a conversation with a portfolio company the other day that did 1.5 million in ARR last year. They're going to do 10 this year, and they're only burning. So they're adding $8.5 million in ARR, and they maybe burned $3 or $4 million. And they're wondering, are they being too aggressive? And I'm saying, no, we should be putting more gasoline on the fire. You're in an amazing position, taking market share, growing quickly, doing it efficiently. These conversations that you're hearing about in the media, they don't apply to you. There are other companies where you do see the growth slowing down. They're burning a lot of money. Maybe they're adding 5 million in ARR, but burning 10 million in ARR. And that's when you say, okay, this story may not hold water when you go out to the market next time. And somebody might say, I don't want to fund an inefficient machine. So we have to start thinking about how do we get more efficient? And so I think you really want to make sure that you're looking at the unique situation that you're in and creating the right answers for that. What I will also say is that no matter what situation you're in, I always think, even as a sales leader, I always think that people think about their existing customers not enough. The beauty of SaaS is in 120% net retention rates, that $1 today from a customer is $1.20 tomorrow. And so the lowest hanging fruit that you often have is in retention, renewal, expansion. And so I'm always thinking about look inward first, make sure you fortify the base, that they're very excited. The renewal starts day one. 6 months out, you should be making sure that you're selling on value, talking to your customers about what kind of value you're adding, which hopefully sets you up for a renewal and an expansion. And that's where I often see people not really focusing on. They're worried about how am I going to hit the net new number? How am I going to hit the net new number? And you can bring down the net new number by doing more expansion. So make sure you're really doubling down on your existing customer base.
Jay, in that same vein, with respect to customer value that Mecca was talking about, you really like the idea of the demonstration of that value, right? Not just talking about it and not just anecdotally, but you're a data guy, right? So talk a little bit about where you see that data.
Yeah.
That's not obvious, right?
Yeah. Thanks, Holman. The mindset shift here needs to kind of go back to square one of thinking about where's the data showing where the opportunities are. So the mindset is a disciplined data approach to how do you wake up every day and evaluate where do you deploy $1 of of spend. And I think there's 2 points to this and it's not just the CEO and the founding team. It is everybody, because everybody moves the company. It's not just the top. The first one is really, how do we know that customers actually value our product and services? It's not just about revenue. We call that a lagging indicator of revenue being an afterthought to what is you actually buying. And that is demonstrated through real product engagement and metrics of saying, all right, of all the customers in January, how many of them are engaging the product in February, March, April? And the more data you have, the more disciplined you can be around that decision-making process. And until you have a sound conclusion or hypothesis on that, then move forward. Oftentimes founders might say, oh, revenue's showing us the light, and then they double down. When in reality, renewal cycles tend to be maybe annual. And so at the year mark, all these customers wake up and say, oh, we need to renew. There's a new contract we need to sign up. It's X dollars. How did we use it? What's the value? And there are a lot of software tools now that are evaluating where you can cut subscriptions based on usage.
Oh yeah.
So it's ever more important to do that. So that's more of like, how do you identify these leading indicators of success to prove customers actually value? Assuming you have that. Oh, sorry. Go ahead.
No, please. Sorry.
Real quick, the second one, which I think a lot of companies need to be thoughtful about right now, is unit economics. And that's probably another whole conversation, but it's just making sure that when you bring on every net new customer, you're doing it efficiently. And there's a lot of ways to evaluate that. There's CAC payback, magic number. There's rep productivity per quotas, or quota productivity per OTE. There's ways to define it. My favorite is CAC payback, because it encompasses fully loaded investment into an acquisition, and then gross margin weighted. What is that customer coming back to you from a net revenue, gross margin revenue number? Like, that is a really key way of understanding how fast you should be going.
And I know you've got a spreadsheet over there to the side that you're going to share your screen with now, right?
I wish.
I
We'll
nerd out.
We'll nerd out any day.
Hey Jay, are you looking at things like DAO over MAU, and when you're looking at like product usage to be kind of your signal for, this is a healthy situation, a healthy relationship? Because oftentimes product usage in many cases is literally just somebody just logged in, but that doesn't necessarily translate to they're getting a ton of value out of the product itself. So I'm curious, like, how do you make up for that?
Yeah, so I think there's ways. I mean, not every engagement is treated equally, and I think every company. I mean, this goes back to, it depends on the company, but totally, I think every company. This is why it's very disciplined. You need to be very disciplined on what you're counting as true engagement. A login sometimes might be an important measurement of, oh, I'm looking in, I'm viewing something, and that's value to me. But if it's like a login, they just open their app and it's like not really critical, right? It just sits there. I think the team needs to be disciplined in evaluating if that's really the metric. My guess, by the way, Doug, is what you're calling out is logins are not as meaningful in contributing to real value. It's something beyond that. And it could be anything from actual interactions across users. So if you have a team dynamic, how many users are interacting? Is it growing week over week? Is it stagnant? Is it declining? Some trend analysis, like that you can look at.
Mecca, you got to hop in here. You were at Mixpanel. I mean, this is your game, man.
I was just sitting here letting the
I saw him watching. I'm like, is he nodding? Is he shaking his head the other way? I got to follow the signal.
What I've always talked about is asking someone sort of where their customers' magic moments are. And so whether it's a product like Gong, whether it's a product like Salesforce, like, you should know what your magical moment is, and you should know how that magic moment translates to retention and renewal. And so I think sometimes like just basic activity logging in can be leading indicators of that magic moment. But I would often say that that's probably a cheap excuse if you haven't dug deeper and figured out when are users really having that aha, that magical moment where they're getting value back. And so we always just talk about making sure you know your customer well. And sometimes this is different by segment, or sometimes you have two different constituents who you might care equally about, but making sure you're drilling down to that magic moment and then measuring that and seeing how that's changing over time. And
if I can just add to that, because I think that's exactly like really foundational. there are actual ways to like regression test how your leading indicators are associated or correlated to the actual retention. And there's a lot of experimentation, but I think we as a community need to be very dedicated to running those experiments. And it does take some time, but that's an important piece of the journey here. For example, if you say, all right, well, we think it's going to be this key indicator that we think if it's active, it's success. Well, test it out. See if you measure that, is it correlated to a high, net dollar or gross retention basis? If it's not, then it's probably not the North Star metric or the aha moment or the leading indicator. Keep testing it until you've identified something that does translate into like really strong retention. And there might be more than one, so be open-minded to what that is.
So Jay, you've kind of straddled real quick here, Doug, you've kind of straddled the product line. And I really want to know, like, modern sales pros, where's the sales function in this? And what is the question we should be asking? Because we're not sitting behind Mixpanel. We're not sitting, well, some of us are sitting behind spreadsheets. Is that where you were going, Doug?
Well, yeah, so it was like, who owns this? Like, who does this?
Who owns this? Yeah, where do I get this info from?
Side, or is it like a growth person on the product side? Like, where does this fit in the organization? And if you're a revenue leader, who do you hire or who do you want to hire to go do this analysis for you? That's the question. And if you're trading off hiring an SDR or hiring this person, how would you evaluate?
I mean, I
got any thoughts, Rebecca?
Yeah, I have to say that, when I'm interviewing revenue leaders for our portfolio companies, if this isn't something that they're talking about in the first few minutes, we're looking at a revenue organization that's going to have some sort of scale. It isn't just going to be a couple of large enterprise salespeople. I immediately move on, because I think that this is sort of some of the highest leverage things that you can be doing, thinking about RAM time, cycle time, thinking about like, what are the levers in my sales velocity? How do those things change when I tweak one variable? And I think like it's important to have somebody who can help you do the heavy lifting. So I've always had a really, really good rev ops, sales ops person who's a thought partner to me. But this has to be, if this is something that's coming from a sales enablement function and they're like, oh, there's sales enablement trying to push something on the sales force, it's never going to work. It has to be something that's ingrained in the DNA of the organization, that the leader is talking about and that managers are talking about, and that funnels all the way through the organization.
And I think investors. Oh, sorry. Go ahead, man.
Jay.
I was just saying, I think investors also can play a role. I mean, at board meetings, we continue to push founders to have the first slide being what we're discussing here. What is that aha moment and how we're doing hitting it? Revenue is great. I mean, it's very important. It's very important. But revenue without the foundation of customer value creation is pseudo revenue, right? It's going to churn out. There's not a strong quality of revenue, et cetera, et cetera. So I think investors also can play a role in pushing founders to focus on this, because it does have to come from their leadership. And I would say, to Rebecca's point, RevOps should be a very high priority hire if you're not currently do not currently have that role set up.
So Doug, keeping that investor hat on and that mindset, but shifting a little bit from that operator advisor role to what we're looking at from the standpoint of pitches, go into a little bit of detail around if anything has changed and what those changes might be in this sort of economy when you're evaluating a pitch.
Oh man, I mean, when we're evaluating a pitch, it's we look at the same. We had kind of our core ethos for how we evaluate a company is pretty much the same. Although what we're really trying to determine, and we've got our what we call our 5 M's, right? Management, i.e. the team. Is there something compelling about the team that would people would want to join and follow them, or do they have a secret, what we call the kind of that it factor? Of course, the market, is the market big enough? The metrics, are they showing the up and to the right, which typically by the time they get to us, all three of us, all of us really. Moat, kind of like what is that, what's defensible about what they're doing? And then we call kind of the last one the M factor, which we tend to look at it more as like customer love, like how much usage and love are your customers actually delivering. But in this environment, I'd say we probably double click on more of the fact of like, is what they're delivering really truly an aspirin, or is it a vitamin? Is it a must have versus a nice to have? If it's a nice to have, it's not as compelling right now because the reality is it's going to take so much more work in order to really hit those metrics that we want to see in these early years. But it's often hard to prove and validate that because we all drink our own champagne and we all think that our solution is the greatest thing since sliced bread and nothing else is better. And they'll easily replace. I literally was talking to somebody this morning about an equestrian startup, and she's like, it's a $4 billion market in the U.S. And I'm like, what? It's a marketplace for registering for a horse race? Like that doesn't make any sense. And she's like, she's going from 600,000 to 40 million in her first year, and I'm like, oh my gosh, that is. So, and I literally wrote her a note. I'm like, you look so naive when you're doing this because that's not how you build and grow a company. And like talk about why this is mission critical, and like this just doesn't seem like what people are going to be spending their money on. So I don't know. It's like I guess we just have to remember the basics. Like you want to build a business that has lasting and staying power. So then build a business that's efficient.
Mecca, how about early stage? What's changing in this economy?
Honestly, not. I mean, the pricing has changed, but the way Doug said it perfectly. What we evaluate still doesn't change. We're looking for amazing founders with unique insights. I'd say the one little bit of nuance is if there is downstream capital funding risk. So we looked the other day at an early stage business that was going to be very capital intensive. And 3-4 years ago, we said, hey, this would easily get funding. And today we're saying there's definitely more risk. So we asked a lot about what are your key milestones? When does it get de-risked? How much more funding does this unlock? How can you stage out this $100 million thing that you're trying to build? And they had a plan behind it. So we actually ended up making the investment. But I think that you just need to be very critical. If you say, I'm writing a $3 million check today, but the end prize is going to require $100 million of capital. How do we make sure this happens in a world where people are far more skeptical than they were 6 months ago?
By the way, I love the fact the valuations are coming down. Thank the baby Jesus.
Say more about that, Doug. 6 pounds per ounce, baby Jesus.
Look, a year ago, we were talking to a company that had like 100,000 revenue, signed $2.5 million seed on a $90 million post. Who's doing deals like that? But that's what the environment was like. It's like there's no effing way. You got to go from 100K in ARR to 40 million in 18 months. Otherwise, you're gonna have a down. Like it just didn't make. It just wasn't. It didn't make sense, right? But now it feels like, and granted, as a founder, maybe you're thinking like, oh, the VCs are gonna get more of my company for less of investment. But at the end of the day, if you find the right partner, i.e., Jay or Mecca or T12 or Emergence, then we're in this for the long haul. We're not in this just to make a quick buck.
Yeah, see, that's where my optimism just comes from, because I feel like we were all seeing the same things, Doug, last year, and we were like, what is going on here? How many of us said that when we kept reading the news? And it's just like a Fugazi is Wolf of Wall Street quote right there of just like, what is going on? It's pixie dust. It doesn't exist. It's no man's land. And I think now when this mindset shift is happening, I think a lot of founders are feeling more reinvigorated because they're like, wow, the market is telling us something, but we believe so much in our businesses and our products that we are going to outperform the market. And I think a lot of companies are looking for that. A lot of funds are also looking for that. So now we've had this reset mind shift of like, all right, let's go back to the basics of like fundamentally, let's build real businesses. I think there's been some comments on like, how do we get to profitability at some point? Let's be mindful of that. Let's use that word, the P word, and think through that. And then if you do that, money's there, customers are there. Like there's a lot of big markets still to be had, and everyone who's listening on the call, like be energetic that this opportunity is here. It's a lot's coming here.
The other thing that I would add on that too is that the valuations coming down is the only party that really loses out maybe a little bit is founders, but for employees, this is a net positive. You're getting in the same company at a more reasonable and realistic valuation. So as a sales leader, rather than joining a company that all of a sudden is on a 100x ARR multiple, you're joining on a 20x or a 15x or hopefully a 10x, something that's far more reasonable, that you have to do less heroic work to sort of earn that valuation. And I also think that there's been a weeding out of, for some period of time, I think everyone said, everyone is starting a company. Everyone's getting 30 million posts with just, a PowerPoint deck that they made 3 days ago. And sort of now I think that some of that is weeded out. You have far more serious entrepreneurs who are in it for the long haul and not in it to just make a quick buck. And I think that that's better for the entire ecosystem, that like every business, no matter how great, Stripe was a great business, but there were some really freaking tough days there and no one quit. Everyone just kept pounding the pavement, kept going on. And I think you want an entire executive team. You want early employees who realize that this journey is not going to be easy. There's going to be some ups and downs, but they're in it for the right reason and not in it for a quick 2-year, 3-year flip. And in Web3 right now, we're investing in Web3. We think there are a lot of great ideas, but we also think there's a lot of Ponzi schemes where people see there's a way to make money really, really quickly and not actually deliver something that changes value for customers. And so I'm like Jay, I'm so incredibly optimistic for the next few years of software businesses getting started.
I want to encourage folks who are listening to drop questions in the Q&A. I see a couple questions here, and we're going to get to those in just a second. I have a question. We've kind of alluded to this concept of risk, right, on the investor side. How much appetite do you have for founders and leadership teams taking risks in this kind of an economy, with the idea being that the risk is going to correlate potentially to some great reward or potentially to some downside? And I'm not looking for an actuarial answer here, but just kind of gut instincts. You're having conversations with folks who are saying, hey, there's a lane we could check out. It's a little bit different. It might require, let's not call it a pivot, but it might require a little bit of a shift. Are we encouraging that, or what are you telling your portfolio companies, Doug?
Well, I mean, that's the world of startups. I mean, you're constantly, literally the world of a startup is you're constantly evaluating the risks and the decisions, because everything in the world of a startup is a trade-off. If I hire this engineer, do I no longer hire a salesperson? If we go after this particular customer and their demands or requirements a little more than what we're capable of right now, do we continue to go after that customer? I mean, you're constantly it's a revolving door of evaluating risks and your risk tolerance. I mean, I think at the end of the day, so in our minds, nothing is really different. It's like, just be smart. Think about ways in which, like, how might this impact your burn? How might this impact, some of the capital expenditures that you may need over the long term? Like, we're going to be more fiscally responsible in terms of risks, or at least we're going to recommend to be more fiscally responsible in terms of the risks. But at the end of the day, all startups are risky.
Yeah, I'll just add to that. So I think the first question is always, what's your runway? If you're 6 months out, be focused on not running out of money than running experiments. Within experiments, there's typically two types. There's one of, how do we make adjustments to fix our core competency, our core product, our core customer? Those experiments should be taken rapidly to make sure you really nail down what's your North Star metric, all the things we said. For experiments that are either experimental from the standpoint of new markets, international, launching a new product, I think also depends on runway. If you have more than 20 months, then I would still encourage founders to experiment. There are many ways of slicing the onion, so continuing to evaluate those is really important. But do it in a measured way. Make sure that you're not just setting experiments just to set them. Make sure you have a disciplined approach to how you evaluate if the experiment went well and what to do, and make sure you know how much money you're investing into said experiment. Just do it not frivolously. Do it with intention.
We've talked about this from the strategic perspective. We've talked about it a little bit from the technology and systemic perspective. And then, what we haven't talked about is the fact that there are real people involved in these companies. There are people who are losing jobs. There are people who apparently have been made offers and the offers have been rescinded. There are people whose friends are no longer there. There's a lot going on with the people. So, a question is, how do you energize? I think the way it's been framed sometimes is just, how do you keep things calm? I don't know if calm is good necessarily. I think allowing some of that emotion to maybe be channeled in a positive direction might be a better way to go. But how do you, on the sales side, let's keep it boxed there, because there are folks who are listening who have sales teams and have sales responsibilities. What do you do as the fires start blazing and as everything suddenly seems a little bit topsy-turvy and the cheese is moved and the winds are swirling? What's the role of a sales leader to ensure that there's still a focus on goals and to even be able to catalyze people behind things that might be markedly different than what they were doing 6 months ago? Mecca, anyone?
Yeah. So I think, number one, I always focus on communication. As a sales leader, you're in rooms that your SDRs just aren't in. And so you can sit around and see all the headlines of people getting laid off, and you may not know sort of what position our company's in. And so I would always try to be very candid about the conversations that were happening at the leadership level. And also, like, all of the businesses that I are a part of have very public leaderboards metrics from a company standpoint and a sales standpoint. And if you can just see the numbers of like, oh, wow, we're still 120% to goal. We're still growing hand over fist. Our pipeline coverage ratios are still great. Our sales cycles still look like X. You don't have to do much communicating. You're just reading off the sheet. And it's like, this was our business a year ago. This is our business today. Like, if you continue to perform, like, you shouldn't be worried here. And so, for me, I'm always about trying to sort of never get too high with the highs and never get too low with the lows. Make sure you're kind of steady and even keel, and make sure you're just communicating the fundamentals of the business. And if the fundamentals of the business are bad, I think you want people to know, like, hey, what we're doing right now is unsustainable. We need to figure out something new, and I need all of your helps in troubleshooting this. So whether it's a positive message or a negative message, you want your whole team understanding what they're facing. And in early stage companies, I think some of the beauty is that you don't really think about your role as just this little cog in the wheel. You think about your role as sort of creating more value for the company, not just doing your day job, but helping the person to your left and to your right. And so, I'm always just trying to be very honest with where we're sitting and bring everyone together and rallying the troops.
I like that. The radical candor. I saw you nodding, Doug. I remember at Box and Salesforce, both huge screens showing it all,
Yeah. Well, I think, look, my good friend Todd Capone wrote a book called Transparency Leadership. He's all about transparency in conversations. And oftentimes, when things get difficult or the company's struggling, there is a divide between the executives in the organization and then everybody else. And what people need to recognize is there's a multitude of cultures that live within an organization. You've got your customer culture and how you engage with your customers. You've got your executive culture and how executives engage with each other and how they make decisions. You also have your employee culture. And at the end of the day, employees are concerned really about one thing is my job safe and secure? And if you're not having that, to Mecca's point, if you're not having that transparent conversation about what's really going on in the business, what are we talking about as a leadership team, then everyone's sitting around the water cooler, the virtual water cooler, are going to talk. They're going to get scared. And then guess what? Then when they're afraid and they're talking amongst each other, their performance is going to go down. And then that just kind of exacerbates the issue. So the more transparency we can drive in the organization, I think the better off we're going to be. The other thing that I'm promoting a lot recently is, sales organizations as a whole need to have their own mission statement as an organization and their own set of values. What do you stand for as an organization? And what is your purpose for working together as a team? And that's often neglected. And I think, as any individual in an organization, yes, you work for the company for the purpose of the company, but why do you work together as a sales organization? What's your purpose as a sales organization? And if you can create that and make it a collaborative experience where you define your mission, you define your values, and then everyone signs off on it and says, this is how we're going to show up every day. And part of that is supporting each other. Part of that is being transparent with one another, collaborating with one another. You get everyone to sign off on it. So when things get a little dicey, it's like, guess what? We're going back to our values because this is how we all decided that we're going to show up every day. So it's a really, really important exercise that I recommend everybody do.
That's really powerful.
I'll just add one tactic, or not even, just one thing that I like to do, and I encourage people, like, it's pick up the phone call, or pick up the phone and just call your partners, call your superiors, call your reps. People like getting phone calls, especially if it's not planned. I'm on the East Coast. I kind of work West Coast hours, and I usually just call founders at night, my night, which is, they're just wrapping up, and we just chat through like what's going through the mind. And this is true for CEOs, but this is also true for honestly every part of the organization. People just like to be paid attention to. People like to be heard and understood what they're going through. And especially when in the news, there's layoffs happening, there's turmoil, people just like to be, spoken to. And I think it's one of the old school tactics of like phone calls work. And when you see on your phone screen, oh, someone's calling me and they want to know how I'm doing, like that goes a long way. And doesn't take that much time, but I think it's something that I've been trying to do a lot of.
I think that makes a lot of sense, and I think it's even more important in this world where you've got folks who have variable work cultures, right? It could be hybrid, it could be work from home, it could be decentralized, it could be anywhere. And it's interesting because we feel like we have a lot of contact because you look at your calendar and it's like Zoom meeting, or pick your brand. I know you like that one, Doug, but pick your brand, meeting, right? But those are all with a specific intent. Right? It's like we've come together around this thing that we're going to talk about. It's not, hey, Mecca, how are things going? What's going on with your family? What did you do last week? And that sort of a thing. And those types of check-ins, particularly for a sales org, I think is important because a lot of times in the past, a lot of this turmoil, you could get a sense of what was happening in the organization because you'd see executives walking through. You could do that management by walking around, stop by someone's desk. You had the water cooler conversation. A lot of that has gone away. And so being intentional, I think, is a great point there, Jay. Guys, I'm going to reflect some of these questions that we've got here. Backing up a little bit, when everyone owns a conversation, no one owns a conversation. I'd be interested to hear more about what department can spearhead a conversation with clients about where they would go if any organization had to shut down. Marketing, customer success. It sounds like this is kind of a service company. This one might be directed at you, Doug.
Yeah, well, I already answered that one.
Yeah, I think you did. You said everybody, but I guess.
Yeah, well, no. I actually wrote it I responded actually in the chat.
You did? Okay, I'm sorry.
Yeah, look, CS owns the relationship with your existing customers, assuming that is the reality. But so they should be on point. But literally at the end of the day, I think you take a swath of your customers and you assign them to different executives and people around the organization, and everyone gets involved in having these conversations about how is it that we're servicing you, and how can we continue to deliver on the value that we promised you. And I think it's a conversation that everyone needs to hear. And by the way, if CS folks are having these conversations, awesome. Use Chorus, use Gong, record it, and then share little snippets of it around the organization. So it doesn't just have to be so not everyone has to have the calls, but everyone needs to hear what's being said and what's being shared.
Yeah. Okay, let's put on the sales hat. How can pitching a product be improved in the current economy from a sales perspective? We can run a little clinic here. Jay, you got a good arsenal of folks over there. Or Mecca, there we go.
What would you say to your teams?
I think it's not just the current environment, it's always an iterative process. So we're always testing new messaging. We're trying to always understand what resonates. I think figuring out the painkiller versus vitamin message is really important, really understanding your ICPs. And so I think as you get bigger and as you get more advanced, you should be getting better with your segmentation of, okay, I've got this persona at this size company in this stage. This is the message that's going to resonate. And so we're always just thinking about how do we continue to get more and more laser focused on a persona to make sure that we're driving in on this is why our product is so much better. This is the pain that we're going to solve. And then you're always selling an ROI message. You're never talking about speeds and feeds. You're always talking about how does this drive the bottom line of the business.
Yeah, I just think about simplify and quantify. Depending on the audience you're going after, but everyone wants a simple message. What do you do? And then quantify, as Mecca's saying. They want to know, how is this going to help me with what I'm working on every day? I know it's like very simplistic.
I'm going to throw one little caveat into both of your responses.
Yeah.
As a buyer, we just don't really like dealing with salespeople, because unfortunately, as a default, you have sales in your title, and so there's an element of trust that doesn't actually exist. If you really want to drive home the value message, if you really want to make sure that you're aligned, the important thing is use the voice of your customers. What have you heard and learned and understood from your existing customers that is similar to the person that you're reaching out to, that you think is shareable? Like, hey, I was just talking to my good friend Jay over here, and he shared this is what's going on in his organization. My hunch is you might be feeling something similar.
Yeah.
Right. And so don't just say like, hey, this is what we do. This is how we do it. And this is the value that we're going to deliver. Use what your customers have shared with you as the ethos of that, because that gives you that credibility. That gives you that it demonstrates the level of empathy, because it shows that you're thinking about them.
I love what
Chief storyteller strikes again.
It's really true. One of the goals that we always had is to basically teach with every touch, whether it's a check-in email or whether it's an actual meeting, that the customer should walk away having learned something. So even if they don't buy from you, they feel like that was a valuable interaction. And a lot of that is with sharing expertise or best practices that you've seen with other companies. So it's really becoming an expert in your customer, their market, their problems, and helping them walk away from every interaction with you or your company smarter and better informed.
Yeah, there's this.
Okay, we got Jay. I'm gonna go for it.
I was going to say ecosystem selling. I think what we're discussing, and what great point, Doug. Ecosystem selling, referenceable customers, referenceable partners, close connections works huge. So ecosystem selling is a huge part to factor in.
Janisha's got me on the clock here, so I apologize for stepping in, but we've got to go to some takeaways here. And if we can frame these takeaways from the standpoint of, hey, I listened to this thing, I spent an hour with the folks over at Modern Sales Pros, heard some great things from VCs. Now I've got to go back to my desk and do something in the next 24 hours. What is that thing that a sales leader or a founder should be either thinking about or taking action on that we've discussed today that gives them a framework they can leave with? Let's start with Doug.
Oh gosh. So I've got two thoughts right now, because Wayne Morris, not surprisingly, just asked a great question, which is how do we increase the average tenure of a sales leader? And it kind of is tied to kind of my final thought here, which is, look, don't be afraid as a founder, as a sales leader, to talk about adjusting your numbers down. Let's not be afraid of that conversation. And board members, be honest about this. Unfortunately, what happens is when all of a sudden you show in your metrics that like we're likely not going to hit our revenue targets, all of a sudden it's like the board and the founder's like, well, maybe we need a new sales leader. And maybe that's part of the reason why sales leaders, the tenure is pretty short. So we have to be really cautious about that and recognize like the reality of the 3-3-2-2-2 model, which drives so many venture capitalists in our business, is not super realistic. Definitely not so today in today's environment. So let's not be afraid to have that difficult conversation about, hey, maybe we should adjust our numbers so that A, we can all make a bunch of money, and B, we're just being much more realistic about our growth trajectory.
Thanks, Doug. Mecca, soundbite.
For me, it's measure twice, cut once. And so whether or not this is actually your initial planning or whether or not it's reforecasting in the second half of the year, it is getting your business down to sort of like a science, understanding what the leading indicators are, being able to adjust on the fly quickly, understanding how to pull different levers, how to sort of drive improvement. And I think I've seen very few sales leaders who spend too much time thinking about the metrics of their business. And I think in an environment like this is even more so. You need to lean in to be able to say, this is what we're seeing at top of the funnel. This is what we're seeing in close rates. This is what we're seeing in sales cycle. This is how our ramp time is changing. Like, you just want to know your business sort of cold and be able to, as soon as the business is evolving for the better or for the worse, make an adjustment.
Thank you. Janisha, before I get to Jay, this is your 1 minute warning that you're back on deck so you can make your way back to the room. Jay, soundbite, what's the takeaway?
Quantify everything and ask the hard questions. I think there's still so much of the journey to be had. I mean, we're all signing up ourselves on not knowing the answers. So you really have to be disciplined in quantifying and having that mindset to go back to the basics. What are we building? How do we know it's working? How do we quantify the answer and then trust it? But I think stay disciplined and quantify everything.
Fantastic. Gents, this has been great. I will add one from my perspective, which is that necessity is the mother of innovation. Scarcity drives entrepreneurship. This is why we're here. Strike while the iron's cool. Janisha, back to you. Thanks, fellas.
Wait. And I also want to, Mecca, what's that company that's going from 1 million to 10? Can we talk to them about doing their Series B? I'm just saying.
It won't even be a Series B. It's a Series A, but you'll hear about it in a few months.
Okay, let's talk.
Nice.
So here for this. Thank you so much, everyone. That was incredible. Hillman, Jay, Doug, and Mecca, thank you so much for this incredible panel. And the warning as I came back out of a rabbit's hat, and here I am. So thank you all so much for joining us. I'm sharing on the slide right now, the 3-day agenda for the rest of the summit. So do not go anywhere. You're also going to get a quick little nudge from Goldcast that our next event is a masterclass. You know him, you love him. him with Jeremy Donovan. It's how to scale a high-performing sales team with the master himself. So that will be at 12 p.m. Pacific. Make sure you stick around and you hop in with and join us for that, as well as Pete Kazanji will be on the panel. Another final thank you so much to our panelists. We're all going to do a disappearing act ourselves and head backstage and debrief. But again, thank you so much for joining, and we will see you all at the next one. Take care, folks.
See ya.